Welcome. Today we dive into the world of ETFs, focusing on SCHD ETF. Now, you might be wondering, what exactly is an ETF? ETF stands for Exchange Traded Fund, which is essentially a type of investment fund and exchange-traded product. ETFs are traded on stock exchanges, much like individual stocks, and they hold assets, such as stocks, commodities, or bonds. They offer an effective way for individuals to invest in a broad spectrum of assets without having to buy each one individually. Now, let's talk about the star of today's discussion, the SCHD ETF. SCHD stands for Schwab U.S. Dividend Equity ETF. This particular ETF is quite interesting as it focuses on high dividend yielding U.S. stocks. Essentially, it's a selection of some of the highest dividend-paying stocks in the U.S. market, all bundled together into one easy-to-buy package. But what does this mean for you as an investor? Well, one of the great things about investing in high dividend yielding stocks is that they can provide a steady stream of income. This is in addition to any potential capital gains from the rising value of the stocks themselves. This makes SCHD ETF an attractive choice for those looking for passive income. The SCHD ETF operates by tracking the performance of the Dow Jones U.S. Dividend 100 Index. This index is composed of high dividend yielding U.S. stocks and is a key benchmark for dividend investors. So, in essence, when you invest in SCHD ETF, you're investing in a diverse range of top-performing high-dividend U.S. stocks. This can provide not only potential growth from the appreciation of these stocks, but also regular income from the dividends they pay out. Now that we have a basic understanding of SCHD ETF, let's delve deeper into its performance. Stay tuned as we explore the past, present, and future of SCHD ETF and how it might fit into your investment strategy. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. Understanding the past performance of an ETF is crucial to predict its future potential. One such ETF that captures our attention is the SCHD ETF. Known for its solid track record, the SCHD ETF has been a consistent performer over the years. The ETF is a part of the Schwab U.S. Dividend Equity ETF family, and it has been a favorite among investors thanks to its consistent dividend payouts. The SCHD ETF focuses on companies that have a record of paying out dividends, thus offering investors a steady stream of income. It's not just about the dividends, though. The ETF has also shown solid growth over the years. Yes, there have been ups and downs, as with any investment, but the overall trend has been positive. One of the factors that set the SCHD ETF apart from other similar ETFs is its focus on quality. The ETF's approach is to invest in high dividend yielding U.S. stocks of companies that have a record of consistently paying dividends. This strategy has paid off handsomely, with the ETF delivering impressive returns over the years. But as any seasoned investor will tell you, past performance is not a guarantee of future results. That said, the SCHD ETF's track record does offer some insights into its potential. The ETF's consistent dividend payouts and its ability to deliver solid returns even in a challenging market environment speak volumes about its resilience and potential. Moreover, the SCHD ETF's performance compared to other similar ETFs has been noteworthy. While other ETFs have had their share of struggles, the SCHD ETF has managed to stay afloat and deliver consistent returns. This resilience is a testament to the ETF's sound investment strategy and its focus on quality. In conclusion, the SCHD ETF's past performance paints a picture of reliability and consistency. The ETF's focus on companies that have a history of paying dividends, combined with its sound investment strategy, has led to impressive returns over the years. This track record of performance gives us a glimpse into what the ETF might offer in the future. SCHD ETF's past performance paints a picture of reliability and consistency, but what does the future hold? The future of SCHD ETF relies on several key factors. Let's dive into these elements to understand how they could shape the trajectory of this ETF. Firstly, the performance of the U.S. economy is a major influencer. SCHD ETF is predominantly composed of U.S. companies. Therefore, a thriving economy typically spells good news for these companies, potentially boosting the ETF's performance. Conversely, if the economy stumbles, it could negatively impact the ETF. So, keep an eye on economic indicators like GDP growth, unemployment rates, and inflation. Next, the Federal Reserve's monetary policy also plays a pivotal role. Changes in interest rates can significantly sway the market. When rates are low, borrowing costs are reduced, encouraging businesses to invest and expand, often leading to a bullish market. On the flip side, high interest rates can increase borrowing costs, potentially slowing down business growth and dampening the market's mood. Thus, the Fed's monetary policy stance could have a direct impact on SCHD ETF. Finally, the performance of the companies within the ETF is another crucial factor. SCHD ETF includes some of the highest dividend-yielding U.S. companies. The financial health and growth prospects of these companies can have a substantial effect on the ETF's performance. If these companies perform well, the ETF is likely to follow suit, but if they falter, the ETF could also take a hit. Hence, monitoring the performance and outlook of these companies is essential. In summary, the future of SCHD ETF is not set in stone. It's influenced by a myriad of factors, including the state of the U.S. economy, the Federal Reserve's monetary policy, and the performance of the companies within the ETF. By keeping tabs on these elements, investors can better anticipate the potential direction of SCHD ETF. These factors will play a significant role in shaping the future of SCHD ETF. As we navigate the ever-changing investment landscape, understanding these influences can help us make more informed investment decisions. After all, the best investors are not just those who follow the trends, but those who understand the factors driving them. Predicting the future is never easy, but we can make educated guesses based on available data and trends. Peering into the financial crystal ball, what might the future hold for the SCHD ETF? To answer this, let's take a look at its past performance, current market conditions, and the influencing factors we discussed earlier. SCHD ETF has shown a steady track record of sound performance. It's consistently provided investors with a decent yield, thanks to its focus on high dividend-yielding U.S. stocks. This trend is likely to continue, especially with the current low interest rate environment, where investors are hunting for yield. However, it's not just about dividends. SCHD ETF also boasts a well-diversified portfolio of high-quality companies. These firms are not only leaders in their respective industries but also have robust financials, making them well-positioned to weather economic storms. This bodes well for the ETF's future performance. Looking at the broader market conditions, we see a world grappling with economic uncertainties, including inflation concerns and geopolitical tensions. These factors could cause market volatility, which might impact SCHD ETF. However, remember that this ETF comprises companies with strong financial positions, which typically tend to fare better during turbulent times. Let's not forget the factors that directly influence SCHD ETF. As we discussed earlier, the ETF's performance is tied to the health of the U.S. market, the performance of the high dividend-yielding U.S. stocks it holds, and the overall economic climate. While predicting the future with 100% certainty is impossible, we can make educated guesses. Given SCHD ETF's past performance, its portfolio of high-quality companies, and the current market conditions, it seems like SCHD ETF has a promising future. However, it's essential to remember that investing always carries risks. The future is not set in stone, and various factors could sway the performance of SCHD ETF. So, always do your due diligence and consider your personal financial situation before making any investment decisions. While we can't predict the future with certainty, SCHD ETF appears to have a promising outlook. Investing always involves risks, and SCHD ETF is no exception. As we navigate the world of investment, it's essential to remember that the prospect of high returns often comes hand in hand with potential risks. SCHD ETF, a popular dividend-focused ETF, is not an exception to this rule. One of the most common risks associated with any investment is market volatility. The value of an ETF is directly tied to the performance of the underlying assets it holds. If those assets, in this case a collection of high dividend-paying U.S. companies, experience a downturn, the value of the ETF will correspondingly decrease. This could result in a loss if you need to sell your shares at a time when the market is down. Another risk to consider is the changes in the dividend policies of the companies that SCHD ETF invests in. SCHD ETF is designed to provide income through dividends. However, the companies it invests in may change their dividend policies at any time. They might choose to lower their dividend payouts or, in some cases, stop paying dividends altogether. Such changes can significantly impact the returns you receive from your SCHD ETF investment. Then there's the potential risk of economic downturns. An economic downturn can affect all sectors of the economy, and the companies that SCHD ETF invests in are no exception. During a recession or a period of economic uncertainty, these companies might struggle, which can potentially lead to a decrease in the value of the ETF. It's important to understand these risks before deciding to invest in SCHD ETF or any other investment vehicle. By doing so, you can make informed decisions about how much to invest, and when to exit your investment. Remember, investing isn't about eliminating risks. It's about understanding and managing them. The more informed you are about the potential risks, the better equipped you'll be to navigate the unpredictable waves of the investment world. Being aware of these risks allows an investor to make informed decisions. If you're interested in investing in SCHD ETF, here's how you can do it. Investing in SCHD ETF or Schwab US Dividend Equity ETF is a straightforward process, but it does require a few steps. The first step is to ensure you have a brokerage account. This is non-negotiable as it's the platform you'll use to buy and sell shares of SCHD ETF. Opening a brokerage account is a simple process. Many reputable online brokers offer these services, and you can typically set one up in less than 15 minutes. You'll need to provide some personal information like your social security number and address, and you'll also need to fund the account. The minimum amount required to open an account varies between brokers, so it's worth shopping around to find a broker that suits your financial situation. Once your brokerage account is set up and funded, you can start investing in SCHD ETF. To do this, you'll need to place a buy order through your broker. Simply search for SCHD in the platform's search bar, specify how many shares you want to buy, and then confirm your order. One thing to note is that SCHD ETF trades during market hours. So if you place your order when the market is closed, it will be executed when the market opens again. Also, keep in mind that the price of SCHD ETF shares can fluctuate throughout the day. So the price you see when you place your order might not be the price you pay when your order is executed. Investing in SCHD ETF is not just about buying shares and holding on to them. It's also important to monitor your investment regularly. Keep an eye on the performance of SCHD ETF and the broader market trends. This will help you make informed decisions about when to buy more shares, hold on to the ones you have, or sell your shares. Investing in SCHD ETF is a straightforward process once you have a brokerage account. So if you're looking for a diversified investment that focuses on high dividend yielding US stocks, SCHD ETF might be an excellent option for you. Let's take a moment to review what we've learned about SCHD ETF. We started with a basic understanding of what SCHD ETF is. It's an exchange-traded fund that tracks the performance of high dividend-yielding U.S. companies. This means it's a basket of stocks. So instead of buying individual stocks, you're buying a share of this basket. We then delved into its past performance, which has been quite impressive. The SCHD ETF has consistently provided investors with steady returns over the years. It has outperformed many of its peers, thanks to its focus on high-quality, dividend-paying companies. Next, we touched on the various factors that influence the performance of SCHD ETF. These range from the overall health of the economy, the performance of the companies within the ETF, to the interest rate environment. It's a complex interplay of various factors, all of which have a profound impact on the ETF's performance. We also speculated about the potential future of the SCHD ETF. Though nobody can predict the future with absolute certainty, we can take educated guesses based on historical trends and current market conditions. Given its past performance and the robustness of its underlying companies, it's reasonable to expect the SCHD ETF to continue its upward trajectory. However, as with any investment, there are risks involved. The performance of the SCHD ETF is subject to market volatility, interest rate fluctuations, and the overall performance of the companies it's invested in. It's crucial to keep these risks in mind when making investment decisions. Finally, we covered how to invest in the SCHD ETF. It's as simple as buying shares through a brokerage account. But remember, it's always important to do your own due diligence and consult with a financial advisor before making any investment decisions. With this knowledge, you're better equipped to make a decision about investing in SCHD ETF. That brings us to the end of our deep dive into SCHD ETF. We've journeyed together through the past performance of this exchange-traded fund, understanding its growth trajectory and the factors that have influenced it. We've peered into the crystal ball of prediction, examining potential future scenarios for SCHD ETF, and we've also navigated the choppy waters of risk assessment. Our exploration has taken us to the practical steps of how to invest in SCHD ETF, providing you with the knowledge and tools necessary. We've then recapped it all, summarizing the key points to help cement your understanding of this investment opportunity. Yet as we wrap up, it's crucial to remember that investing is not a one-size-fits-all endeavor. Your financial situation, risk tolerance, and investment goals are unique to you. Therefore, while the information provided in this video serves as a solid foundation, it's vital that you conduct your own research and possibly seek advice from a professional financial advisor before making any investment decisions. Investing in ETFs like SCHD can be a great way to diversify your portfolio and potentially generate returns over the long term. But the future, as we all know, is unpredictable. The financial markets can be influenced by a myriad of factors, including geopolitical events, economic indicators, and industry trends, to name just a few. So stay informed, stay curious, and most importantly, stay engaged. Continue to educate yourself not just about SCHD ETF, but about the wider world of investing and personal finance. Knowledge, after all, is one of your most powerful assets. If you found this video helpful, don't forget to subscribe, like, and share this video with others who might benefit. Stay tuned for more informative videos on investing and personal finance. Until next time, keep investing wisely.